where success meets psychology in Paulina's way. Strengthen your mindset every week. Success story every Wednesday. Traders who broke through their limits. Psychology session every Friday. Join now. Hit the bell. One session could change your trading forever.
Welcome traders, welcome to this special Trading Psychology Live with special edition of Ask Me Anything. I'm Paulina and I am a trading psychology coach here at FundingPips, and today is all about you, your questions, your struggles and your breakthroughs. So whether you have blown accounts, whether you are struggling to stay disciplined, whether you're overtrading or whether you are worrying or feeling emotionally trapped, or just wondering, how can I become better and build that bulletproof trading mindset? You are in the right place. We're not here to throw fluff around and motivational quotes. We're here to go in deep into neuroscience, into psychological theories, into mindset, into emotional regulation. And that is going to help you to shape your trading identity. Because let's be honest, over 90% of traders know that psychology is their issue, but barely anyone trains it in a way that they're supposed to. So today we are going to change that. And before I ask you questions and before we dive in, I have some questions that we already took from Twitter when we posted about the session. And also I will be taking questions here from YouTube as well. And that is going to be our main focus, so I can really tailor the theme of this conversation around you and what you need, what you're struggling with, and what type of solutions that you are in need of. But before we dive into your questions, let's talk about why most traders fail when it comes to trading. And let me assure you, it's not because due to lack of strategy. It's because of the emotional repetition that they engage in. And it's not that they are tired, those traders of the charts, that you are tired of the charts, but you are tired of your own behavioral loops, of your choices and the kind of decisions that you make on the charts, the type of hesitations that you go through, the type of revenge trades that you engage in, the type of self-blame that is repeatedly happening after a trading day that disappoints you. And also about the overconfidence and that you are struggling with, especially when you engage in a winning streak. So the emotional shutdown is something, a cycle, I would say, that most of you go through. And let me tell you the truth. You don't need to learn more about charts or even trading psychology. What you need to do is you need to unlearn the patterns, behavioral and habitual patterns that you engage in that sabotage your trading edge. So before, again, we talk, I want to highlight and really go into the 6 core emotions of traders. But it's not just of traders. Those 6 core emotions are actually the 6 core emotions used in psychology. And that is fear. And I want you to actually vote whether fear is something that you are struggling with in the markets. And if you do, then please tell me that fear is one of those. So the fear is most common actually, because it triggers premature exits, hesitation before entering the market, or complete avoidance, and actually hesitation to the point that you will actually never execute in the market. And your brain perceives the uncertainty in the market as a danger, which is natural. And we spoke about it in our last live trading psychology session on greed and fear. But even normal pullback, or even the normal amount of fear that you should be feeling, is over exaggerated. And you actually, with that sense of fear, you don't trade not to win. but not to lose. So actually, your whole focus is not even on winning trades. Your whole focus is on not losing trades. So it's a complete opposite to what other traders go through. And that's, of course, a dangerous mindset. So if that's something you identify with, stay aware, because that is one of the key things to identify about yourself and what you go through on the chart as a trader. Now, the second emotion is anger. And if you experience anger, please drop in a comment too that you are experiencing anger. And that shows up in revenge trading. This is where anger is most visible. You're not trading the charts anymore. You are punishing the market for making you powerless. And that turns into a punishment towards yourself. And that anger clouds your judgment, because you start feeling frustrated and angry, and it shifts your logic into emotional autopilot and chase after the charts. Number 3, sadness. And if that is something that you experience, drop number 3 in the comments as well. And that is often misunderstood in trading, the feeling of sadness. And the feeling of sadness that I am referring to is the crash that you are feeling after the day of overtrading or after losing an account. The emptiness that you are experiencing, that nothing works, that your edge is useless, that you are useless. And it leads to avoidance, shutdown, or complete loss in confidence and belief that you can achieve your goals as a trader. Now, number four is greed. And if you experience that, please drop 4 that you actually experience that in a market. And greed is not just about wanting more profit in a market. Greed is driven by dopamine, which also we discussed in previous live trading psychology series. And that is purely chemical-based addiction behind it, actually, because you overtrade, you break the rules, and you double down after the wins, and it feels good until it doesn't, because it crushes you. And you're no longer even chasing the profit from the markets. You could be plus 6% on that day, and you continue chasing, because it's actually not the profits that you are chasing. You are chasing the feeling good, the dopamine in your brain, which is similar to addiction. So if you are experiencing that, you should really pay attention to yourself. There's number 5, which is very much underestimated, and that's disgust. And it turns inward. It's the type of feeling that you experience, what is wrong with me? You feel almost disgusted with your own performance in the markets, your decisions, your losses. You feel that self-disguise when you think, I can't be disciplined. And the feeling of that doesn't lead to discipline, because it usually will lead to self-sabotage and self-punishment, because you feel so bad about yourself, you continuously punish yourself in the markets, and you think, you know what, it doesn't even matter anymore. I deserve to feel this way anyway. Now, the last one is 6, surprise. Markets are unpredictable, and surprise can jolt your system. It causes you to freeze. So if there are unexpected events, moves in a market, this is where surprise sneaks in. And it can make you freeze, exit impulsively, enter impulsively, overreact, and add another position. Because when you see a big move in a market, then this is where you go in with another position. And without a reset routine or sticking to your rules, that will throw you off your plan completely, because all of a sudden you will double up on your position, and you're going to lose, and then everything just goes out of the window. So when we talk about trading psychology, we're not just talking about mindset in theory. We are talking about emotional regulation in real time on the charts. That is why it is important not to just backtest, but also to be exposed to the live markets and be able to have the anticipation and patience and plan when it comes to your trading. When it comes to backtest, it is phenomenal for data collection, because you can cram six months of data over the weekend when you backtest, very intensely. But actually being in the market, anticipating, preparing, feeling the disappointment, feeling all of those different emotions and self-regulating yourself is the power that you need as a trader. And let me tell you another thing, that every consistent trader you admire, or you're watching our success stories every Wednesday, they are not just better traders on the charts, they are better traders in trading psychology. So it's not that they are better at reading the charts, they are better at reading themselves. And that's how they progress and move forwards and become better over a period of time. So now with you taking that information in, I want you to ask me questions, and I'm going to address questions step by step. I cannot pick all of the questions. I will try to pick the questions that repeat the most or that most of you are struggling with. And this is where we will try to address as much as we can, okay, today during this conversation. And I hope that all of you will enjoy it. And I hope that all of you will find value in it. So one of the first questions that I have received actually, which was from Twitter. So you guys can start typing on YouTube, but I'm going to read out a question that I've received from Twitter. Let me just scroll down to find it. And this is where I received a question as such. What is the difference in a mental game that separates winners from the rest? Is it the mindset? And I would say yes, mindset is the edge that separates the losing traders from winning traders. Because when it comes to consistent trading, everybody knows that it's not just technicals. All of us know technicals. But when you master your trading psychology, you will allow for your technical edge to operate over a long period of time. And I will give you an example, like a real life example that you can really put into place. Let's say I would give you a box of tools where you have screwdriver there and other tools. If those tools are perfect, the most expensive and most beautiful tools, but you are not going to use it for the purpose of what those tools supposed to serve you for, you're not going to get the best out of them. This is precisely what happens in a market. You could have the best trading edge, you could have the best technical analysis, and one of the most phenomenal win rates on paper, technically, let's say 80%. But if you don't have the correct mindset to execute it, to allow for the entries to play out, or to at least wait patiently for the entries to get to the levels, because there will be days you will not execute. There will be days that you may have 3 entry models with your trading plan. There might be days there will not be entries for 3 days. Look at gold this week consolidating, and perhaps there were not entries for a lot of traders, but do you know how many traders have forced their entries? I know that for a fact. This is where you need to allow, with your healthy mindset, to trust the process of your trading edge. That whether you sit in your trade for 5 hours or for an hour, you will trust your analysis and you will not start doubting yourself halfway through your trade. That you will follow your exit plan, that you're not going to get greedy, that you are going to follow the price action, the rules, and you're going to stick to it despite of what is happening. Yes, that is separating the successful traders from not yet successful traders, that you are able to allow for your trading edge to play out over a month and you don't break the rules, or at least you minimize breaking the rules. And that would allow for your trading accounts to survive in the markets, because when you understand your trading edge and when you understand what is your win rate, what is your maximum profit streak, what is your losing streak. If your losing streak is 5 trades in a row, then perhaps, and let's say that could happen over a period of a week, not just in one day, over a period of a week, you have 5 losing trades, and it could happen based on your backtest. Then perhaps you should think, oh, should I go 1%? Or should I go 0.5% on my trades? This is when you have to understand. Now, another thing that I want to go to, because I'm going off onto now numbers, but I don't want to go onto the numbers. I want to talk about that the mindset is the edge, is that those traders who are successful and that you see in success stories, do you think they don't have that urge of breaking their rules? Do you think they don't have that urge to add to their position? Do you think they don't have that urge to just get into another trade after they are at the max limit of their losses? Of course they do. But what they are better at is they are better at emotionally regulating themselves under pressure. And in order for you to become better at regulating yourself emotionally under pressure, you need to go through that pressure. So this is why that pressure is actually necessary for you to experience, so you can understand what works and what doesn't work. And this is where you need to start thinking in probabilities, that perhaps this week in the market is going to be quiet. There is a lot of economical tension. There is a lot of tension across a lot of different countries, and that will have an impact on the markets. And you cannot expect from the market to do and repeat something. It will work in probabilities. Probabilities not just on a daily basis, on a weekly basis, on a monthly basis. There will be losing months. In banks and hedge funds, they have losing quarters sometimes. So therefore, you will experience the same. But your job is to become better and review and not to give in to those emotions, because those emotional reactions is something that is going to have a huge impact on your growth as a trader. So does that separate successful from unsuccessful traders? 1000%. 1000%. Okay, now I'm going to take more questions. So here I have one which is, what is the most common psychological reason that traders blow their accounts? So I would say that the reason for that is when the urge to act, to do something, to fix the situation overrides the plan of entry, exit, etc. And this is something that you need to understand, that you are not doing on purpose. You know, it's your emotional brain that gets involved and it hijacks, your logical thinking. And I already explained that when you go under stress, your frontal lobe decreases in activity, and your frontal lobe is responsible, which is here at the front of your brain, your head, that has an impact on logical thinking. So therefore, when that shuts down, you will not make as good decisions. You are emotionally hijacked. And this is why it is so important for you to find a way of regulating yourself. And this is where genuinely the example is, once you reach your limit, let's say you give yourself a limit for London session, 2 losses max, and for New York session, 2 losses max. In my opinion, that's a fair amount. That's 4 trades. And let's say you split those 4 trades into 0.5% risk on each trade. So your maximum loss for the day is 2%. That means every single trade loses. But here's the trick. You need to allow for every single one of those trades to be in line with your trading plan. Because when you will start emotionally engaging in the markets, you're not allowing for your edge to do the job. But let's say it's a London session. You reach that max of 2. Close the laptop, walk away from your charts. I'll give you another example. Let's say you're a smoker, and let's say you want to quit smoking. But whilst you want to quit smoking, all of your friends smoke. And they say, hey, we're going downstairs for a cigarette break. Do you want to come? And you go. That's torture. Because you're trying to quit, but you're going downstairs with your 5 friends, and all your friends are smoking. You can feel the smoke. You can see them smoking. What do? You are triggering in yourself wanting to do the same, and you are likely to give in. What should you do? No, guys, thank you. I need to stay here. I'm going to occupy myself with something else. If you keep on exposing yourself to the trigger, which in our case as traders is the chart. So when you take those 2 losses and you keep on exposing yourself to it and think, oh, maybe now the price will go up, or maybe now, then you're going to enter again. You need to understand that when you reach your maximum loss limit for the day, or the maximum number of losses that you know that are going to start triggering you. I know that 1 loss doesn't trigger me. I know that even 3 losses don't trigger me. I know I can go on and 4th or 5th trade is going to work out and then it's going to wipe out my losses. I know that. But if I lost 4th and 5th trade, something's going wrong and I should stop. It depends if you are a scalper, if you are on higher time frame, etc. There are so many different factors. But you need to understand about yourself something that nobody else is going to tell you, which is what triggers you in the markets. And I want you all guys now drop, what is the number of trades that you would have to lose that is going to actually trigger you emotionally, that you lose control, that you start chasing? I really want you to engage with me right now on YouTube and drop it in the comments. What is the number of trades that triggers you in the market? Because that is going to be your cue to remove yourself from being triggered. And if you remove yourself from being triggered, you then actually give yourself a chance to self-regulate, to feel better, to increase your logic, and then to return to the markets after a period of time and reevaluate. Or you may think, do you know what? I'm done for today. But if you keep on staring, that's done. So if it's 2 trades, that means I can see someone saying 3 trades, someone saying 2 trades. Okay, 3 trades. Whenever you get to the point and it's 2 trades, you know, let's say first trade, you take a loss. You're like, okay, cool, I'm good. Okay, I'm good. So you're fine. But you said 2 trades. Well, 1 trade, I'm good. But when you're about to enter that second trade, you should say to yourself, whatever happens, I'm stepping away from the chart. And then I don't want to witness that loss. Because when I will witness it, I will want to get in again into the market. So what I would suggest is on that last number of when you don't know whether you're going to lose or win that last trade, right? And that is going to either push you to tilt or you're going to stay calm. I would say set the alarms, set the stop loss and targets, close the charts, don't watch. Walk away. And then after some time, check or set your alarms, wait for your alarm, and it's like, okay, that's what happened. But during that period, literally delete trading platforms from your phone. Walk away from your charts. This is so crucial and so simple. And so many traders cannot do that. And someone said, go and buy a good meal. I agree with you. Go and distract yourself and enjoy yourself with something else. When I was completely full-time trading, when I just first stepped into it, I was going to play games, even though I'm not a gamer at all. But I was occupying myself. Then I started reading books, etc., etc. But sometimes actually not doing something productive, like always about personal development, that you need to read books or always bettering yourself. I was just switching my mind off, playing games. And I was not thinking about the charts. And then whatever happened, happened. And I was in full acceptance because I was not staring at the charts, micromanaging every single move. I was just set it up and I was allowing for the charts to do whatever it needs to be done. And that worked out pretty well for me. Okay? Now, let's go into another question. I have a second question that I already have picked out, and it is, what should beginners focus on to build a strong trader mindset? I don't know whether any of you here are at the start of your journey. Can you all drop how long have you been trading? Actually, that would be very helpful to understand because some of you might be new to trading. So then I will make sure to also cover, answers for you guys. And some of you may actually be trading for 5 years, 3 years. But I would say if you are trading about 1 to 1.5 years, you are fairly new, actually. 1.5 years, that's fairly new to trading. 2 years, it's okay. Some of you may actually 3 years, 2.5 years, 2 years. Okay, fantastic. All right, so what I would say, start with emotional awareness. So at the start, this is your trading edge, actually, because when I started trading, and that was 6 years ago, and for example, Hallett, our CEO, over 10 years ago, and for example, Samuel, he started even 15 years ago, things were different. There were not as many resources when it comes to free resources. There was not trading psychologists coming online like we are for you guys every week on Fridays and giving you tools, tips, psychological theories that are evidence-based that can actually help you to transform your mindset and your trading psychology. There is plenty of information when it comes to educational resources. There is FundingPips to provide you with the system that you can use to invest such a little amount in order to get higher returns. So there are so many things for you guys right now that you are actually ahead. So even when I started, I was still with the brokerages, and I was just depositing $500 and trading with that because there was nothing else that I could do. And I did not get access to trading psychology. We were just kind of all exploring it. And even though I'm a psychologist with over a decade of experience in that field, I had no idea when I started trading that psychology plays such a big part. So this is where you actually, guys, that you are just starting, whether you are under 1 year of trading, 1 year, 2 years, even 3 years into trading, this is now your advantage to take on trading psychology, that you can early in your journey not just focus on the technicals, but actually on the emotional awareness. So don't just over obsess on the strategies, okay? Because I can see a lot of traders, especially at the start, they experiment so much with different strategies that they actually lose themselves there, and they don't allow themselves to see most of the data. The truth is that in the markets, there's not going to be a simple answer. There's not going to be indicators or setups that are golden and that are going to guarantee something for you. But this is where you need to invest your time into one system, at least try it out or backtest it for 6 months. Backtest it at least for 6 months. Then try it out in the markets. Then start building that psychological foundation. So when I was talking today at the start of our Ask Me Anything session that is happening right now, this one here, I said, those are the core emotional factors that you will be dealing with, the core 6 that I have mentioned at the start. And this is where you need to start actually tracking yourself and thinking, how am I feeling before I enter the trade? Do I feel confident? Do I feel anxious? Am I doubtful? Because those are your indicators to tell you something about your strategy. If you are feeling doubtful, perhaps you have not spent enough time on that specific entry model. That means that you need to take that specific entry model and backtest it, or forward test it in a market, or test it more. Or if you're feeling super confident, that's a good sign. But is it overconfidence, or is it because you're relying on data? Are you feeling doubtful? Are you over-risking? All of those little things about how you are feeling before entering the trade will help you to understand what are the lacks in your technical analysis. Because very often there's a big debate in our industry about, is it psychology that's more important or technical analysis? It's both. Technical analysis, psychology, and risk management. All of those things are absolutely necessary for you to become a successful trader. There is not one that's more important than the other. All of them need to be worked on. But like I said, psychology helps you to utilize your tools and put them into action properly, because you need to have the tools in the first place. So that's how you develop your technical edge. But you need to observe yourself. A lot of the times, especially when I was starting, traders were just running into trading and we were not caring about how we are feeling, what we are experiencing, and we were just going wild. But actually, it's about that awareness. Am I calm or am I chasing? After that next loss, am I more on edge when I approach the markets? Am I more on edge in the morning or in the afternoon? Because perhaps in the morning you might be more tired, because perhaps due to your lifestyle or to your work or because you have a family, in the mornings, you're not focused enough to be in the market. So you have to always observe yourself, and then you may actually decide, oh, New York session is more suitable for me because then I feel more engaged with the markets, I feel more awake, I'm more focused, I have more time. You constantly need to observe yourself. There is not a golden edge that anyone is going to give you. It's for you to figure out. It's for you to understand what needs to be done based on you as a person. What is your personality like? Do you get angry easily? Do you get upset easily? All of those characteristics about us as people have a huge impact in the markets, because the markets are our mirror, are showcasing to us what is not working and what it is that we are struggling with as humans. And this is where we need to look at it and think, okay, I need to fix this. But there's also other factors like your lifestyle and what you do on a daily basis. That has also a huge impact. I tell you, from my trading edge, I know London on Monday, London session on Mondays, I perform always really badly. And there was a time that I was in this loop that on Mondays, I would get myself into drawdown, and then for the rest of the week, I was getting myself out of drawdown. Then I was on Monday, I was getting myself into drawdown and then getting myself out of drawdown. And then I was like, well, why am I even doing this? Stop trading on Mondays, or at least start during New York session. As soon as I have done that, everything turned around. Sometimes our solutions in trading are so simple. But when we don't stay conscious and we don't become emotionally aware, this is not going to help us. So this is when we need to kind of observe ourselves and step into the markets with that sense of self that, like, okay, let's see what we have today. Let's see how I'm feeling today. Because trading psychology is not about switching off your emotions and not feeling it, not at all, because we are humans, we're meant to feel things, and actually emotions help us to survive just in general. That's our survival instincts. Emotions are telling you what is right, what is wrong in your environment. You use it in your relationships with people. You can use it in the markets too. There is a lot that is telling you, but you need to utilize that. Okay, I'm going to jump to another question. Okay. That's a big one, and I actually want you guys to listen carefully to this question and then tell me if you relate to it. The question goes like this: why do I feel like I don't deserve to pass the challenge? I have the technical knowledge, but something always sabotages me at the end. Is it normal to feel like success isn't for me? Now, before I go into answering this, please tell me if perhaps that is something that you are struggling with, that you almost feel like you don't deserve to pass the challenge. You don't deserve to have the master account. You don't deserve the reward. You don't deserve for things to be easy. And this is where the self-sabotage creeps in. Any of you struggling with that as well? Let's see what we have. I can see some of you, yes. I can see some of you, no. But I can see that in general, it's something that people struggle with. And yes. This makes a lot of sense. And it has a lot to do with your image of yourself and your self-worth and your belief system. And actually, this question sparked an idea in me to talk about limiting beliefs next week. And next Friday, the topic is going to be on limiting beliefs and how to remove limiting beliefs from your mind and work on yourself to actually make things, or make yourself deserving of things. And it's all about the identity and how you perceive yourself, because if deep down you don't believe you are worthy of success, you're not worthy of receiving $10,000 reward, you're not deserving of trades just working out for you, your brain on a subconscious level is going to find a way to sabotage you and to make things harder for you. Because I can see a lot of the times, a lot of traders putting themselves into drawdown in order to focus better on their trading edge. Because when they are in profit, they're more careless, they're more risky, but then they self-sabotage to put themselves in drawdown. Then when they are in drawdown, they're like, okay, now I need to really focus. And that shouldn't be like that, you know. And I believe sometimes he has a lot to do with the imposter syndrome as well. And very often it happens to traders as well when they get from that point of being losing traders to break-even traders, and finally they get to the point of being profitable traders, and they almost in such a disbelief, because trading is hard and it takes years to master, and they get to that point and they kind of like, am I really doing well? Am I really going to receive a reward? Let me self-sabotage that, you know. And it feels like you don't deserve it. Like, it meant to be this easy? It's impossible. I'm used to working really hard. I'm used to working super hard to end it. I'm used to losing. Why is this? And look, our brains are so beautiful and sophisticated, but also so primitive at the same time. If your brain is used to losing in a market, even if you are winning, which is supposed to be good, this is not something your brain is used to. This is why your alarms start going off in your brain and in your body. You may even feel discomfort when it comes to those winning trades. And your brain is like, hey, we're not used to this. What's happening? Let's put us back into the autopilot where we always struggle. And that's what actually happens, because you don't think you're worthy. And you can do simple things. This is why manifestations happen, because when you speak positively about yourself or about what you want to achieve during the day, for the week, how you think about yourself positively, that you see yourself as an achiever, that you are deserving of all of those things, that you are improving, that you are a consistent trader, you're speaking it into existence. It doesn't just become one of the 1,000 thoughts in your brain. You're speaking it into existence. And when you speak it into existence, it becomes real. And when you actually say it, your ears are hearing it. So it's the output and input at the same time for your brain. And your brain is starting to understand, actually, yeah, I am. Because that's how you rewire your brain, with words, with actually saying all of those things. So now I'm going to go into a next question. Why do I get scared of winning when I'm close to the goal? It's like an unconscious want to fail. Do I have some block about deserving easy money? This is very close to the previous question, so I'm going to keep that one brief, but it's pretty much the same to what we just discussed. And this is what actually inspired me to talk about the topic of limiting beliefs during our next live trading psychology series. Now, next question. How do I handle anxiety of knowing that this trade could be the one that disqualifies me? I freeze up when I'm close to the maximum drawdown. Okay, now that's natural, because you anticipate that it could be a breach. And this is where you need to then think about your approach in a market, because it's the anticipation of anxiety, of failure, and it's the anticipation of feeling disappointed with yourself, etc. So all of those things are kicking in early when it comes to your emotions. And because of that, you are anticipating of feeling disappointed. And because all of that is giving you kind of this, you know, feeling of how should I enter the market? Should I enter a market, etc. This is when you need to review your risk management when you are in drawdown, because it's very simple. This is why the reason I was talking about your winning streaks and your losing streaks. When it comes to your losing streaks, for example, if I know as a trader that based on my data, I could lose 5 trades in a row, but the maximum drawdown for the day on the challenge account is 5%. Do I want to put myself in a position where I could be at minus 5% in one day? Now, this depends now whether you're a scalper and actually 5 losses in a row could happen in one day. because it's part of your trading edge. Or whether you're a day trader and that is something that could happen in a space of a week. Because if you're a day trader and those 5 losses could happen in a space of a whole week because it's according to your edge and you actually take only 1 trade a day, then can I handle being minus 5% in a week? Yeah, absolutely. But if I'm a scalper and I'm likely to enter 7 positions in a day, that's usually what I do, then losing 5 trades in a row and being on minus 5% just as I bought the challenge, can I handle that? Probably going to be harder. So this is where you need to now think and adapt. Is my risk style according to my trading style and my psychology type? Because your risk style should match your losing streak, not your winning streak. Your losing streaks, so you understand what is the maximum drawdown that you are likely to achieve in a day or in a week. And then you need to ask yourself, am I able to psychologically and emotionally deal with that? Because if you are not able to, we are in trouble. And you are likely to go on tilt, overtrade, and do a lot of things that are going to just blow your account. Now, one of another things that you need to think about is when you are in drawdown, do you keep to the same risk management? You could have different rules. I personally, if I was going to do a challenge, I would stick to the same risk, because is it likely I'm going to lose 10 trades in a row? No. If it happened, it happened, but I'm not. I am likely to recover from that. So this is where, for me, that would be safe. But I need to ask myself question number 2. When I'm in drawdown, do I start trading differently? And do I abandon my rules and start over trading? If that's the case, you need to protect yourself and think, okay, how do I minimize dipping more into the drawdown? Or you could give yourself alternative rules. When is until you reach minus 5% in drawdown, you are risking 1%. But then once you reach minus 5%, you drop it down to 0.5%. So you're giving yourself additional 10 trades to recover. Or when you are near to breaching the account or being at the maximum loss, this is where you think I only have 2%. Usually I trade 1% per trade. So that means I have only 2 trades. What if I'm just going to lose my account? Okay, then split it into 0.5% or 0.3% until you are going to win a few trades, and then you can increase your risk. It's all about experimenting what works for you, what doesn't work for you. What works for me may not work for you. What works for you may not work for your trading friend, or someone that you look up to. It's just the way it is, because all of this has to be fitting into our psychology, personality types, what we can deal with, what we can cope with, what are our triggers, what are our strengths in a market. A lot of you never actually think, what is my strength in a market? And actually, I would want you all to focus on your strengths in a market, because so many of you always focus on, I'm bad at this, I'm bad at this, I'm bad at that. But I want you to think, what are you good at in the market? Because this is something you need to double up on and really focus on. Okay? Okay. Let's go with another question. So let me scroll. Oh, that's an interesting one. Why do I always make the same mistake just when I'm doing well? It's like there is a voice in my head saying that's enough, ruin it now. So again, that's a internal resistance, and that is causing you to self-sabotage. And that is it's often called, actually in psychology, an upper limit problem, when subconsciously you believe you've reached your personal ceiling. This is why it is so important to work on your goals and what you want to achieve, because some of you, let's say you earn $2,000 in your full-time job, and a lot of you would think that's my limit. So if you will start earning more in the markets, you will start freaking out almost and think what I said before. Your brain will be used to a certain pattern, certain things, certain habits, certain environments that we are engaged in as people. So this is where you would believe that's my limit, I can't grow anymore. So this is why also it is so unbelievably important to get yourself outside of your comfort zone and start training your brain that it is okay to be outside of your comfort zone. Because if you put yourself constantly in a comfort zone, whenever your brain will experience unfamiliar things, it will start freaking out and it will start feeling unstable. So you need to rewire yourself in order to feel comfortable or being able to cope with the discomfort, and remind yourself that stability is not boring, it's earned, and it's something that you need to grow and work towards. Now, next question. Is it normal that losing trades frustrate me so much when they are normal part of trading? Why can't I accept that losses are inevitable? Oh my God, it's so normal. It's identity-based. Identity-based when it comes to our society, because look, when it comes to our upbringing, in whatever society, in whatever culture you're from, background, religion, country, when we go to the schooling system, at school, we are taught that we need to get the highest grade, that we need to do well in exams, that we need to do well in order to earn, in order to receive recognition, in order for us to feel good. You go to university, it's the same. As you get a better degree, you get a job. As you get a job, sometimes when you make a mistake in your workplace, your boss will be like, what did you make a mistake, etc. Instead of being in an environment where you are taught it's okay to make mistakes, this is how you grow, etc. But no, the way that we function as a society is that failure and mistakes are not acceptable. Only recently there is a big push on the growth mindset that actually making mistakes, it's normal. It's what makes us human beings, right? So your natural conditioning and your natural ability to be, is based on all of that, on years of wiring of how we should be as a society. So it's normal that you are feeling this way, that you are feeling frustrated, or that, you should not be wrong. Because if you think about it, the more we study at school, the higher the chance of us getting a higher grade. The more you study on the charts, the more you spend time backtesting, there's no guarantee you're going to do better in the market. You may still lose. And sometimes what's the most frustrating part, you may do everything perfectly. You plan your trade, you wait for your setup, the setup comes, you are in a perfect mindset, you enter, you lose. It's just the markets. Markets play in probability. There is not even a guarantee that when we do everything right, the market is going to give us profit. So this is where you need to rewire yourself in the way that you speak to yourself. And when you see a loss in the market, don't see it as a failure and say, okay, that's feedback. What can I do with this feedback? Okay, I was in a good mindset. Psychologically, I was good. I waited patiently for my setup. I waited for my level. I waited for the confirmation of my entry. I entered the trade. I set a stop loss. I did not touch my trade. And it meant to go to profit, but it went to stop loss. Fine, everything is done correctly. But when you don't do that, this is where the trouble is going to come, right? This is where you will feel like you are not doing everything that's supposed to be done correctly. So the business is about probabilistic environment. And this is what you need to focus on when you are moving forward. And that is all part of rewiring the whole process of how you understand losses and how you understand winning in the markets as well. I have a special guest here joining us for the live trading psychology series. It's a Q&A, and is the CEO himself. There you are.
What's up, guys? How are you? Excuse me for this. It's a Friday, It's officially end of the week for us. So as I understood, you guys were talking about losses, right? So when it comes to losses, it's just a simple fact that you cannot win them all. You cannot just be constantly winning. I mean, if you're constantly winning, I wouldn't be running a prop firm. I'll just sit at home and just keep on trading, right? So it's a simple fact. You cannot just win them all too. And the only way for you to configure all of this is simply through backtesting. You know, the more you train, good, the more actually you train, the more it will solidify in your brain that the fact that, okay, I won't be winning all of them, but it's fine. If I go through a losing streak, that doesn't mean it is the end of the world too. Correct. That simply is being said that at one point I'll be breaking this losing streak and my winning trades are going to be covering up whatever I lost, as long as you're respecting your risk management as well too. And as long as you're being consistent, with your risk appetite at the same time too. So, however, the only way for you to actually really solidify that mentally is through backtesting. There is no other way. You know, no matter what I tell you, no matter what Paulina tells you, no matter what any book out there tells you, what any YouTube video, whatever, even if you get the best trader out there in reality to tells you like, hey, this is what is it about, and you pay a couple $100,000 whatsoever, you will never ever get it unless you actually get betting by your own from the hole and you try that pain itself, you know. And again, you can always, there is one shortcut in trading: practice. The more you practice, the more the chances of you making it in trading will be. That's a simple fact. That's a simple fact, and I can bet on it. I can show my own personal track record based on it. It's practice. Even back in the days when I used to trade full-time, I would trade New York Open mainly, and then most of my days actually backtesting. It depends, whatever I'm doing, running the company or back in uni or whatsoever. Always there are 2-3 hours in my day during the week that I'm actually backtesting. During the weekend, we'll go up to 6, 7, 8 hours of backtesting. And then again, what are you backtesting to? Because like you could just like reply the chart and just keep on looking at the chart. No, you need to backtest your own system. So my own system was New York Open, gold, and 1 hour time frame, 1 minute time frame. However, I'll get my daily bias with my forex. I'll align my supply and my demand, go all the way to the 1 hour, and then I wait for a new hourly to open. And whatever it is, supply or demand, whatsoever, and then I wait for a proper formation of the hourly, and then at the same time I'll execute on the 1 minute time frame, which gives me the most recent supply or demand. Good. However, I wouldn't even be able to tell you that in a couple seconds if I'm not so into what I'm doing, which is mainly through practice. I mean, like, look at athletes, look at boxers, look at MMA fighters. They train all of the freaking year to fight once or twice a year. So this might actually be your wake-up call over here.
Guys, I was talking for so many minutes, and he comes with one sentence.
Because I mean, she's a trader too, but it's been 11 years, you know, yes, trading. So it's backtesting. Trust me on that. The more you backtest, the more you backtest, your confidence levels are going to be increasing. Your fear levels are going to be decreasing. Meanwhile, your ego is going to be becoming centric. So you're becoming a soul-centered person. At the same time, any kind of fear, you know, like fear of missing out, fear of losing, whatsoever, is going to be minimized. It's going to be on a decline. It's going to be running on a downtrend. Good. While confidence is going to be going on an uptrend. While ego is going to be just being on an equilibrium point. Good. While greed is going to be also going on an equilibrium point, because you now have confidence in whatever the freaking hell you're doing on your chart. All of that is mainly through practice. Simple as that. Practice.
Can I ask you a question from the audience?
Yeah, of course.
I was going to actually answer that question next, but we are going to use Tula as our CEO for this. So someone has said that they feel like they don't deserve to pass the challenge. So they have the technical edge, but there's something in them that always self-sabotages them.
I'll tell you something. I went through that same struggle for almost 3 years, you know, when I first started trading. But, you know, at the end of the day, if you don't treat yourself properly, no one can treat you properly. So it's a self-respect and self-valuation too. You know, the more you value yourself, the more you respect yourself, you expect the same from whoever is in front of you, a chart, person, entity, your girlfriend, your partner, your mom, your whoever, you know, it doesn't matter. And if you pass that challenge in any different means, some of you are high risk, some of you are just like consistently going with those small bits over there. Once you get that funded account, keep it. Don't blow it. Keep it. That's actually when you want to go slow. During the evaluation, you can go a bit fast. But during that funded account, you want to go slow there and stack them too. Keep on stacking these funded accounts, tier 1 funded accounts. Keep on stacking them. And don't sabotage yourself. You know, self-sabotage is it's just like all of this modern mental illnesses whatsoever is nonsense, because just we're too comfortable. So we have time to just self-sabotage ourselves. 100 years ago, no one had time to think of that. Good. So you gotta earn it. You gotta earn it.
Yeah, that's a great one. Now I have another one. Someone is asking that actually they feel nothing when they are losing. They took a loss today in FundingPips master account, but didn't feel no anger, no fear, no anxiousness. That's perfect.
That's what we aim for.
Now we have someone asking about risk. Do you actually have any tips for change of risk when you are in drawdown, for example?
You know, see, I cannot advise you on that. You know, I cannot really advise you on that, on what to risk, how much to risk, and all of that. What I can tell you is on evaluation, you can go a bit faster than funded. On funded, you need to go slow because khalas, you reach your goal, you got your funded account, and you need to maintain it because it's an asset for you. Think of it as an apartment that's bringing you monthly income, weekly income. In our case, it can bring you a weekly income, bi-weekly income, or a monthly income, right? So that's how you need to look at your funded account. Your evaluation, you need to go a bit faster too. You don't want to be stuck in there for a longer time. But on the funded account, you want to maintain it for as long as possible.
Yeah.
That's what I can tell you.
No, let me go through the questions. We have more here. Okay, someone gets affected, their mood gets affected by losing trades. Whenever they enjoy.
Why? See. One of the questions you need to constantly ask yourself is why. When you feel something, why? So, you know, like often or not often, you know, like when it comes to psychology, you know, you need to observe. Once you observe, you'll have outcomes. You need to accept those outcomes. You need to reflect on those outcomes. Learn, relearn, unlearn, voila. You have a different outcome then. As long as you're observing, you know, same thing, your journal, your trades in terms of the chart, your entry, your exit, your session, your volume, and etc. You need to observe your own behavior over there too. So you understand, why am I going through this? Because see, it can be too many different cases over there. It might be like you're just risking something you cannot afford to lose. You can be in need for money. It can be that your perception of money is totally different than my own perception of money too. It can be so many different things. So for you to understand something and crack it, you need to understand, what is it coming from? Why is this happening? Why am I behaving the way I'm behaving? Yeah, it's going to get you in a bit of a rabbit hole, but you're going to basically understand, and instead of being just a program bot running on whatever default settings you had set up in your head from society or whatsoever.
Okay, thank you so much. We have a next one on how to set up a right trading journal.
You know, when it comes to trading journal, the way I used to journal is basically charts. So I execute my trade, I break down my trade on the chart, print it out, just put it in a folder. That's it. I don't care how many losses, how many wins, because I do have my broker statement that will show me all these data. It's just what I care about is just mainly actually breaking down my losses. You know, because my winners are already winners, right? And what I care about, like learning from these losses and constantly flipping them into winners. And what's going to teach me is actually my losses, not my winners. Because if you look at yourself from a beginner level into an intermediary level, Your losses are actually much more than your winners. So the more you flip those losses into winners, that's the more you're going to be escalating your trading experience.
That's the one.
All right, anyways, thank you for having me. Short one, hopefully more to come, who knows.
Oh yes.
Stay blessed, have a great Friday and a weekend. Please practice. That's the only advice I can give you.
Thank you so much,
All right.
Khaled. Guys, this was gold. Going to add anything on top of that. I actually will lead to finishing this session. This was amazing, and I really hope you took notes, because it's all about solidifying everything on the charts in your brain and in your mindset. So let me say this to every trader that is watching. If you're feeling stuck, overwhelmed, or feel like quitting, get on those charts and backtest, because backtesting will do something for you. It will help you to solidify, and it's going to help you to rewire your brain and rewire the way you perceived winners and losses. You will solidify your entries and your exits as well. Then you can take that backtest and data into the market and prepare that life anticipation from it as well. So you just emotionally overloaded, and trading by nature will amplify emotions, feeling of insecurity, feeling of anxiety. That may happen, but the solution in trading is not to quit and walk away. This is the process of going through those struggles, because those struggles are going to teach you how to deal with things under pressure. And in order for you to be able to manage master accounts and scale those master accounts, you need to learn how to operate under pressure. And trading is about behaviors. It's about habits. It's about awareness. It's about tracking your traits, your reactions, your psychology. And like our CEO said, nobody can do it for you. He can give you an advice. I can give you a word of advice. You can read a book, but you need to put that action into place yourself. And remember, talking, writing, planning, printing, and doing all of those things is going to help you to heal the feeling of anxiety. So traders, that's a wrap for today's Ask Me Anything. Perhaps in the future, we will have more of those with our CEO himself. And I hope this session has really helped you to identify certain things that you were struggling with based on the answers that we had given you, but also with you familiarizing yourself with other people's problems as well. And I want to remind you to join us on Discord for the Trading Psychology Talks, which is a psychology refill at 5 p.m. Dubai time on Mondays in a Psychology Corner channel on Discord. I will either talk with you, I will do quizzes or activities and help you empower your mindset every Monday. Then every Friday, we have a live trading psychology series here, which is different topics. It might be Ask Me Anything. There might be guests like we had today. But next week, I would like to talk about limiting beliefs and how to remove those limiting beliefs. And remember, every Wednesday at 5 p.m. Dubai time, there is a success story of a trader like you who went through the struggles, through doubt, wanted to quit, but they didn't. They didn't, and they got to the point of receiving sizable rewards. You can be next in those success stories, and I do wish you that. And remember, you're not just managing trades, you're managing yourself, and you need to master managing yourself in order for you to flow in the markets. Stay grounded, stay disciplined, and most of all, be kind towards yourself. Thank you so much, traders, and wishing you the best weekend. Take care. Bye-bye.
Where success meets psychology. In Paulina's way, strengthen your mindset every week. Success story every Wednesday. Traders who broke through their limits. Psychology session every Friday. Join now. Hit the bell. One session could change your trading forever. FundingPips. Built by traders for traders.